Well, thank you, Raymond. I'd like to thank yourself, NinjaTrader, and everybody that's here in attendance. I just want to make sure that everybody can hear me. If I can just get a quick AV check or something. All right, great. Um, this webinar, as Raymond said, will be recorded, and we're also going to record it and put it on our website, which is here. When you come to our website, trendfollowingtrades.com, you can see in here we have a bunch of tabs up here, and it'll be under the Videos tab. So you'll get to see a recording of this webinar in case you can't find it anywhere else. And without any further delay, let me continue on here. I'm kind of shooting from the hip. I'm not a big PowerPoint guy, so I'd really like to bring in some charts and talk about our system and the method. But I would like to introduce myself. My name is John Karnas. I'm a 10-year plus trader. Unfortunately, most of that time I spent as a losing trader, about 5 years. I was introduced to it about 12 years ago, and someone convinced me that paper trading was for wimps and things like that. So I threw real money at it, and over a 5-year period, lost quite a bit of hard-earned money doing it. I am a mechanical engineer and a pilot, not by profession, but by hobby. I do have quite a few advanced ratings. However, all of that, I believe, really attracted me to very complex and sophisticated systems. So in the time that I spent in the first 5 years I was trading as a losing trader, I decided that I wasn't going to lose any more money after I discovered NinjaTrader and something called a simulator. Once I got into that, I basically started looking at systems, went from system to system to system, pretty much own and have purchased everything out there, have joined, quit, bought, you name it. Can't say everyone, but a lot of different systems. And I do have quite a bit of knowledge of how they work, and it has helped me now when we're in trades, looking at trades, managing trades, knowing what other traders are doing. I finally decided after what a lot of people call decision lock. I had so much information in my head, so many different ways of trading, so many indicators on my charts, so many different systems up there that I thought my head was going to explode. So I decided to strip everything off the chart completely and just trade with price and price only, not a single indicator. No Fibonacci, no Elliott wave, nothing. What I wanted to do, I did a lot of psychological research, and I really wanted to find what my true personality was. And trading real money will bring out your emotions and all your inner demons. Trust me on that one. Anybody that's traded live, I'm sure can agree with that. So I developed a way, and I saw the way to trade with, like I said, absolutely nothing. I did it for about 3 years. And essentially, there are two types of ways that you can trade. The way I look at it, one is called inside out, or what we call trend following. It's very different from counter trend trading. And then there's the other way, what I would call outside in. And that's where you're trading the edges on the outside market coming back in. So after trading for 3 years, or a little bit short of that, I was really I had to make a decision. Was I going to invest in trying to develop some type of system or indicators or automation to use what I know was working, or maybe somebody will come along and come up with something that's very close to alignment with what I was doing. And lo and behold, Trend Following Trades, Chris and Peter came along, and I really liked what they had. It was very much in line when I put it on the charts of what I was trading. I saw a lot of alignment, and what it allowed me to do is it allowed me to look and scan many markets rather than concentrating and focus on one. And everybody in this room knows as well as I do that markets tend to congest and trend and congest and trend. So if you're a trend trader and it congests, it's difficult. If you're an outside-in trader, or and the market's trending, you can get hurt really bad. So got a hold with Chris and basically bought into half the company with my wife Sylvia, and I pretty much run the trade room. Not every day during the week, but anywhere from 2 to 5 days, depending. I still travel, and she does all the administrative work and sending out indicators and things like that. So I would like to, let me just get rid of this, but trend following trades simplify your trading decisions. This 2-to-1 risk to reward. I would like to talk about that. Let me just get this out of the way here, if you don't mind. Get this out here, and I want to bring up a couple of charts here. Okay, this is crude oil, and a lot of the stuff you'll see on our website, both in the training material and in the public section of the website, you'll see a lot of information and what Chris had designed the system around being Renko bars and wick Renko bars. And this is actually a day in the trade room. All these ninja markers that you see are actual live trades that were taken, entries and exits. And the red circles, the red arrows are trades that were actually taken. The red arrows are losers, and the green arrows are winners. The circles here are system trades that should have been taken. In this case, was missed. I bring this up, and someone's going to say, "Wow, you got losers in here." Yes, trading, part of winning is losing in trading. Anybody that tells you different really is not being honest with you, to say the least. So I just want to go over a little bit about the tools, and then I'm going to expand the original design and concept using Renko and wick Renko bars and apply it to range and tick bars as well as time frame bars. I found in doing a lot of research that the tools work great for all different types of bars. We use Renko and wick day trading, and we'll be adding a mix of range bars into the room. However, there are a lot of different styles of Renko bars that people have come up with, and most of them really haven't found any that won't work, but most of them will work with these tools. And I'll show you the flexibility and what we show and try to do as a trend following trader. Why trend trading? Well, like I said, when I had stripped the chart completely of its indicators and looked at everything, studied volume, I found that the flow of money, the flow of volume, is definitely with the swing. And every time, when I talk about an inside-out trader, and by the way, anybody that asks any questions, I'll try to get to them as soon as I can. Please be patient. We have quite a few people here in the room today. So in essence, inside out means you basically take a trade from the inside of price movement looking for it to continue on. It's a methodology and theory called, you believe in trend continuation before reversal, okay? And essentially, outside in trading, people would go short up here, long down here. You know, that's the difference, as I explain it, between outside in and inside out. So did a lot of the outside in trading, divergence trading, things of that nature, and didn't really lose a lot of money with it, but didn't make a lot of money with it either. I almost did it. I did it for about 10 months and found myself just treading water, spending a lot of commission, making my broker happy, however, not really growing anything into my account. And I always believed and felt that the philosophy of a minimum of 2-to-1 reward to risk ratio as a general rule was the way to go. It's kind of like a coin flip, and that's what I want to show you here after I get through discussing exactly, you know, the way we enter trades and what you're looking at here. Essentially, we have an indicator we call Momo. It's a hybrid indicator. It's not a straight momentum indicator. It's quite advanced in what it does. It does not diverge easily. It is not a squeeze indicator. It has a look like it, but there's a lot built into this indicator. However, simplicity. To me, simplicity is the key. With this, it allows a trader that's focused and, you know, uninterrupted to scan different markets, and when a market's not trending and it's congesting, just move away from it. Don't look at it. We have so many futures markets out there nowadays that we can trade that we don't need to focus on one market. They all have the same execution principles. They have different tick values. They have their own personalities, which you do need to learn. But essentially, the tools and the method and the system over time pretty much work on all of them. Do want to explain some of the indicators. So I went through the Momo. Then we have these two lines here we call a chop zone. And this is when price is really trading inside this area here, the momentum indicator. You really don't want to be in the market. That's an indication that price is just going to move, you know, horizontal and sideways, kind of like you'll see right here inside this area here. You know, of course, I took a trade here. This was done live in a trade room. managed it, exited out of it. But you'll see, I make mistakes, and as a real money trader, and again, in the trade room, any trade I take is a live trade, and you'll see the execution plots, win, lose, or draw. So, I don't have all winning days, and I don't have all losing days, but you do get to see somebody trade with real money and emotion in the trade room. I do want to mention something. At the end of this webinar, I have a really special, what I think special, treat about options that I'd like to talk about, a real simple approach to trading options that I've traded in my retirement account. Has worked very, very well and has grown my account pretty phenomenally over the years with kind of a cool type of play. A lot of you might know about it, but I'm going to save that for the end of the webinar. I just want to let you know, if you do subscribe pretty much by the end of the weekend today, but I'm sorry, tomorrow, midnight Eastern Standard Time, we'll give you a free month of the trade room. Our cost of our tools is really very inexpensive. You get it for 99 bucks a month essentially, and the first month there's a $250 setup fee. After that, it's you have to add $99 to that, and then after that it's $99 a month for as long as you choose to be on board. You can quit at any time, entirely up to you. Just wanted to mention that. So let me describe this line here. You'll see this solid line coming down, or we call this a trigger line, okay? And we call these dots up here stop dots. So in this area, when you see this price bar turn indigo, it's a trend direction indicator, or we call TDI, paint bar. It actually paints the bars. And we look for the momentum to be in red for sell. And we consider this a value area. At every given point in time, price has a value. And again, the key is at any specific point in time. You want me to use an arrow pointer? Great. I can do that also. So probably a good idea. I'll do it right here. This value area is an area where we either like to enter trades or use it as an area where trades have been entered and people have realized that there's value in it, and in this case in a short, start selling it. This little diamond here, excuse me for this little ninja arrow, that's actually an execution arrow. There's a little diamond plotted here. That's a system signal. And it is actually plotted at the close of a bar. So this being wicked Renko, we could put our order in ahead of time. Once price trades up in here, we know it's coming down. We can put it in with a stop limit. Or we can wait for it to fire, signal. We do have alerts. They are customizable. You can program wave files, things of that nature. And in this particular case, I was using a shorter time frame over here. So let me go back to a pointer here. I was using a shorter time frame over here for entry. Do like to look for alignment. Alignment does have the most successful or the highest probability of success in trade follow-through. So what we look for is and I'm going to draw an arrow in here. We look for transition from buy to sell, or from sell to buy. And once we get into buy to sell, we want to come out of the chop zone, and we want to see a pullback. Once we see a pullback into the value area, we know that this price at this moment in time has some value to it. You have different options with wicked Renko. Again, we plot the signal at the close of the bar. You'll see an arrow or a diamond. These are fully customizable. Basically, I have an arrow programmed as a deep retrace and a diamond programmed as a small retrace into the value area. So the arrows have the best value. We have ways of entering this trade inside this value area here and placing a stop just outside the stop dots here. So you have 2 of the 3 components you need in the trading system. You have an entry area, you have a stop area, and then what about the target? Okay? So the best way that I feel and has worked over a long period of time is to get in, to look at your risk and manage it. Managing a risk is most important. And then there's a couple ways you can go if you're a target trader. We like to look at a minimum of 2-to-1 risk. So if I see I get in here and I put an 8-tick stop on here or a 10-tick stop, I want to go for 20 or 30 ticks. Okay, you can see that here. Actually, this came a little shy here, traded down here. I'm using an ATM strategy I'll explain later in Ninja that actually pops back when it hits your target. Sometimes in squirrely markets, you get slipped a little bit, but at least if it hits my target, I know I'm going to get some profit out of it. The other way that you can do it is you can follow these stop dots. If you really want to, on markets in days where swings move and you can see it, a lot of times it's good to get in and get out when you have these stop dots. The method does work best in a trailing mode, meaning when you go with multiple lots. I like to use the term a 3-lot, in lots of 3, whether that's in futures, Forex, or whatever. Basically where if you're going to trade a 1 lot, you have to take off a target or trail the dots. You trade multiple lots, lots of 3. The way we like to do it is take 2 off, two-thirds of your position at a target that is a 2-to-1 reward to risk entry. Notice here we have a support line. I'm going to talk about that on your left side. We do talk about this in the trade room, okay? And when you get to this line, we don't just want to say we want to go 2-to-1 and that's it. We do look at left side, and I'm a strong believer in left side support and resistance. In the trade room, you'll see prior day's highs and lows, thing of that nature. I actually bring in a free swing indicator that's available on the internet to show market structure, higher highs, lower lows. So we do want to trade truly with the trend, with market structure. And we do want to be aware of these areas of support and resistance. In this particular case, I remember this trade. It was an accident. However, when you come down here and you're in the trade, you see this area, you need to make a decision on the support. In my opinion, am I going to use this support area to manage? What I say is my target hasn't been reached yet. However, I know I'm at an area of support, prior support. It may hit this and bounce. Nobody knows. I don't care how many times this has been hit. There are kind of patterns that will set up of failure and reject. However, this is an area that other traders will be looking at. So you have a choice. Take profit here, take 2/3 your position off, or just manage your stop to break even plus a tick, whatever. In the case, what I do in the trade room a lot is I will actually manage to break even rather than take profit here. Because in the trade room, I also serve another function. I'm actually trying to trade signals that eventually will be automated. That is our goal. So it's not there yet, but that is something that we are working on as partners and something we're trying to develop, and we'll be trading ourselves. And if we have something that's good, something in a way we can release to the public, we will do that. So anyway, the stop moves down as you're doing that. Take 2 positions off here. If I had a 3rd position, I trail here. Okay, nice little trade. Notice right here, I'm going to draw this in, and this is all drawn in real time. What do we have here? Near left side resistance. Tested it once, broke through, came back. What was support is now resistance, rejected off of it. Longer time frame, you kind of see the entry with a signal. I usually like to see a support and resistance reject component to a trade. So I'll call this an add. We did get out of our trailer according to our rules, and so I found this trade valuable enough to add on, and it did indeed go on. Actually, this was a 19-tick winner with an basically a 10-tick stop. So it was truly 2-to-1. Got slipped a tick again on the strategy. However, this kind of trading, what I want to show you here, I made some mistakes in the morning, got in. I'm not going to make any excuses. The trade should have been taken here. Didn't take it. Instead, I took it late. Should have had a trailing mentality. Took a 10-tick loser here. Took a trade here inside the chop zone with a line. Really there was no alignment. There was alignment, but transitioning through, but still in chop. Transitioning through here, didn't quite get through. So I took the trade, noticed the double bottom area of support, reversal bar, managed it at exit. So a small 5-tick loss, actually 4-tick loss because I entered on a smaller time frame. Then up here, got in. There was some resistance up here. Decided to take a buy. Was a signal trade, and we do have divergence playing out here. Really should have passed on it. So 3 losers in a row. Down about 25 ticks per contract. So that can hurt. A lot of people say, well, 3 losers. Wow, that's a lot. Now got my head back together. Took basically 3 winners. These are 1-lot trades here. wound up with these uh, 6 trades, these arrows, did not take this win, wound up 26 ticks per contract for this session right here. And essentially that was right near the end of the trade room. So the power of 2-to-1 trading is you only need to be right 50% of the time to make a decent amount of money. As you get used to the system and the tools and you get focused, I will tell you, moderating a trade room is quite difficult. It was for me, and it is for me. I've been doing it for a couple of months and getting used to it, but it is a distraction, something I'm not used to. And, you know, it does have its pros and cons. It does help you focus on the charts. However, it does distract you while explaining and answering questions. You know, actually affects your execution trading, especially in fast markets. So I do want to explain that reward to risk. There's a lot of people out there that really try to make a living scalping. Your brokers love you, and you know you can make small profits. But to make large profits, me personally, I had a hard time trading size. You know, 10 lots, 15 lots, things of that nature. Where here, you put a 3 lot on, and you get a nice trailer out of one market. You can have some huge days and make good money with trading what I'll consider not a lot of size and looking for targets that are giving you 2-to-1 reward to risk minimum, and obviously looking at support and resistance as areas to either manage in trade management or areas to take profit. So that kind of covers a little bit area about the trade room and these tools, and you'll see a lot in the website again about Renko and Wick Renko. I do want to just pop this back up here and show you by the way, there's my ugly mug, overweight ugly mug. Here's a little bit of bio about me, and you know, I will talk about this bonus at the end of the webinar. This you're going to have to wait for. It's a pretty cool little thing that I do. I think a lot of people will be turned on by it, and if you do a little research, you may find it very profitable as I do. Can't guarantee that, so I'm not giving any trading advice, just letting you know that I use it very effectively. But in here, you go in this trade room in our website under the trade room tab, and what you'll see is I try to post the latest things that I've done on the website in this area. And you know, our website's not the greatest looking. However, you come in here, we send our trade room invites out Sunday evening Eastern Standard Time for the next week. It'll tell you what days rooms are open, what days are closed, the time they open. We tend to open early for 8:30 news to try to catch a good news release in either currencies or oil. Try to stay away from the indexes pre-market, pre-cash market. So if you come into this room here and you see this announcement up here and you're a room member, and you haven't gotten an invite, you know, please shoot us an email so that, you know, you for some reason didn't get the email. But in here, there's a whole bunch of things. We talk about the trading room plan, basically what I trade. And at the end of the day, I post in various different markets that we watch. We don't trade them all because I can't catch all these trades and moderate. We post, according to the rules that I have, some results, again with a 3 lot, taking 2 positions off in one area and then trailing either a stop above stop dots or to break even. And then I give a little description of each trade. What I started doing was I started adding a short video recap of the trading room day, and you can go down through here and you'll see all the way down, you know, scroll down to the bottom. It's quite lengthy. I try to do every day that I trade in the trade room, and then right here you'll see this last day, first system losing day in a while on the 28th, and really tough market. You know, I give a description here. You know, again, we're only trading in the AM, so I can't in the room. I can't talk about what happens in the afternoon and things of that nature. You know, a nice currency trade, but pretty much outside of that currency trade here, a lot of chop and things of that nature. So let me go down through here, talk about an introduction, what we're trying to do in the trade room, and I post a strategy that I have that basically instead of putting a target at, let's say, 10-tick risk, 20-tick target, what I do is at 20 ticks, I jump the stop up to 19, and the purpose of that is it's basically a market if touch type of exit, and the purpose of it is when I hit my target, I want to get profit. If it pushes through, the stop moves tick for tick for tick and follows it. Sometimes I'll get an extra tick or two. Sometimes I'll get slipped back a tick or two. But there's so many times that it hits my target to the tick and comes back to break even that it only takes 1 out of every 20 trades for that to happen for you to lose 20 ticks. So to me, this is well worth it. And then we have some talk about, January 2nd was the opening trade room and things of that nature, and of course the disclaimers. So, we are not a signal service. We do follow all the CFTC and NFA guidelines, and all trading material is educational and is used for educational purposes only. So enough of that. Let me get through here. I'm going to minimize these Renko bar charts. I want to show you something here. I'm going to show you a different look. Those of you that have been following, I need to keep my cursor on here. These are trade executions. Don't mind these arrows here. They're from a different chart. As a matter of fact, let me just get these off of here so it doesn't confuse people as to what these are. Excuse me a second here. And a lot of people will talk about tick charts. So here are the tools. Same tools, nothing changed. Slight adjustment in the chop area using a 175 tick on crude oil. I'm just using crude oil as an example. 240 tick. I could pull up any chart for intraday trading. But you notice as we go back here, you'll see a lot of these signals. And again, we'll look at this signal. We see the clean transition. Let me get this pointer off here. We see a clean transition through the sell area into buy. We do have divergence. We look at this. This is what we call a good start point. You have divergence here, lower low in price, higher high in momentum, indication that the market might reverse. See a transition through to buy, comes out of the chop zone, pulls back. Lo and behold, we're in the value area. Get a signal at the close of the bar. Boom, you're long. Place a stop somewhere down here, 1 or 2 ticks below here. Calculate that 2 to 1. You're out at your first target, 2/3 of your position, or if you're a target trader, you can exit there. Or you can just trade these stop dots up until they close below up here. Okay, nice trailer. You can see here. So this is the whole concept. Instead of trying to fight this trend. Now here, again, this indicator does not diverge easily. You can see this. So there are other entries in here, and there are trades you can take. However, I believe taking the earliest entry and trailing it out. There are people that will use these tools as counter trend traders. They'll go long here, they'll go short here, and if you want to trade from the outside in with these tools, you can do that. However, that's not what you're going to see in the trade room. I can promise you that. And then again, we have a transition through here from buy to sell. Nice start point. Divergence happening. And I talk about this. You'll see me draw lines, support and resistance in the trade room as we go and talk. Nice start point. Comes down, hits an area of support, this double bottom, comes back up, fails through it. Okay, this is a signal also, but this is an inside the chop zone signal. It's saying that we're not confirmed in our trade, meaning don't have momentum outside the chop zone. So then we notice it comes back up here, tests this prior support area that broke, tests it as resistance, then a tick, comes back down, gives you a signal, and boom, you're short. 2 to 1. Actually, this one went to the tick. Again, that strategy would get you profit. Or a lot of people will take a sell right in this area, right in this value area. When it pulls back and they see an area of resistance, instead of waiting for the signal, they'll say, hey, this is where the price right now is the cheapest at this moment in time. I'm going to take it right here. And they'll put a nice small stop up here. So you can manage, you can trade that way. You can trade the signals. There's a whole bunch of different ways you can trade. So again, we like to look for alignment. So essentially, if you look at 2 time frames here, it's not necessary, but it does help. You can see that we are in sell here. We go over here, we are in sell, but we're trading into divergence. So this is what we call a late signal, and not something you really want to think about taking. And then here, we can see here, again, these are using tick charts, okay? Nice transition from sell to buy, pullback. And these charts are best used in trend following, in trend trading when the markets are not moving and swinging with a lot of follow-through. I find that you can have very small risk, 2-to-1 reward, 6 or 7 ticks of risk, 12, 14 tick target, trail out, things of that nature. When you go to larger time frame Renko bars, you will be looking at 10 to 12 tick stops and 20 to 25 tick targets. So a lot of people, that's hard to stomach. This is another way to get down out of that, to go to a different type of bar. Let me minimize these guys, and I want to show you range bars, because a lot of people do like trading range bars. So again, I'm shooting from the hip here. I did pull this one up. Let me get this guy off of here. I did pull this one up, and actually this was Friday. Okay, I am connected, so this was Friday in oil, trading range bars, and this is, if I was moderating in the room, how it would have gone. Depending on what time you get in, there you can see we have a divergence start point here. I just want to go through this real quick and show you kind of a start point, unless you're trading at 7 o'clock, but really anything before 8 o'clock Eastern, to me, is just too early. However, there are markets like the DAX and things that move at prior times. In any case, we have a nice start point. We see a transition from sell to buy. We see a pullback, and now you'll notice you have green arrows and yellow arrows. These yellow bricks here are warnings that the trade's executing inside the chop zone. Well, that's okay, because we pulled out of the chop zone. Sometimes you will pull back. And there's actually an area right here, if I draw it in, near left side support, right there, that it is bouncing off of. So I'm inside or right at the value area. To me, this is a great trade to take. It has very low risk. You place your stop just below here. In any case, with this type of 8 range, we'd have a 10-tick stop and a 20-tick target. In the type of a 6 range, let me get to that trade. Let me just go here. That trade in the morning. Okay, it's a lot quicker. In a 6 range chart, we'd have a 8-tick stop and a 16-tick target, and then trail out. So you can see both these trades here and here, both here and here. There was alignment. We were out of the chop zone and momentum, popped out here. These do line up, and it's a trade to go. Pretty simple as that. Visually simplistic, alert for sound. And what happens, what I like about the smaller time frames and some of the range bars is you get an alert, and then you look over and you sometimes have a chance to enter at a better price. So unless you get a market that's screaming up or down, you get a pullback like this, where it pulls back down and in, you may not always be able to catch that. So you get in here, take 2/3 your position off trail, close below stop dots. This is about a $400 trade on a 3 lot, another $400 trade on a 3 lot, kind of doing the same thing. 10 a.m. news came out at 10 o'clock. You can see in here, not going to take this trade. This is a signal, not going to take it. And then you'll notice this line drawn here. We do not take trades into reverse divergence or hidden divergence. There's videos explained on the members' website about this, how to identify it and how to look at it. So we don't want to trade into that. A lot of mixed methods, a lot of outside-in traders, a lot of hidden divergence traders come in and we'll start to short this because it's a noticeable setup. Again, talking about knowing how other systems work. I don't want to trade against something that will be very obvious on a different set of indicators. It is obvious here too. Then, we have a losing trade, okay? We are trading into divergence here, multi-cycle divergence. However, it did reset itself, came up from sell to buy. It was not outside the chop zone, but you could take this trade and, you have a stop out, okay? This is 8 ticks. All right, we're stopped out 8 ticks. Then the next trade, we go in here, nice transition from buy to sell, pull back into this value area, trigger alert, get filled here, 2-to-1, trail out here, another nice $400 trade on a 3 lot or more. And then, here, this trade here, you can see what we have, reverse divergence again, hidden divergence. Price is lower, momentum's higher. Here, price is higher, momentum's lower. All explained in our training material and in the member site, talked about live in the trade room. And if I could see it, we have a lot of people, I try to get people to help. We do, look at a lot of different markets, and to catch this is good. However, you get in it, you see it, eventually you look and say, ooh, I'm going to, reverse diverge trade, just close out of it. Whether it's break even or small loss, small winner, you shouldn't be in it. And then again here, a little small loser. This is an optional trade right here. Does go to be a winner. And then here, some nice follow-through trades. So overall, nice winning day. Couple losers, more winners than losers. So with that in mind, with the 2-to-1 risk to reward, you get an idea. Now, if we trade only on the larger time frame chart, you'll notice here we have one trade. Again, this is a 10-tick stop, 20-tick target, 8 range type of methodology. We look at support and resistance. Okay. Fortunately, we were able to either manage or take profit right at this resistance area here, which will be drawn in, and then trail out a close below the stop dot. So boom, we're out here. Nice winning trade. This trade here would have been taken to break even, came down, didn't quite make a double bottom. Notice the divergence. You can either decide at that point in time, I want to move to break even, or you're going to hold the trade, makes a true double bottom here, heavily diverged. Me personally, I'm managing to break even, or some people will take profit here. There's good profit in here. There's probably 12 ticks or 14 ticks of profit in here. Some people might just say, I'm taking profit here. That's fine. It's an individual management. Not taking these trades inside the chop zone, so these signals that fire, you see the yellow. And then again here, we do carry over divergence from another time frame chart. That's why we like to look at too. A lot of times that type of reverse divergence, and specifically reverse divergence, does not show up on a larger time frame chart. So we will consider on a smaller time frame chart because it is a very strong signal to trade against when you're trend trading. So we get into that here, and then you can see the transition. No pullback into the value area, so we missed the swing. We get a transition, no pullback into the value area. We do have reverse divergence. We get a pullback here. I'm not going to trade into it, okay? And had I got into this trade, and did have reverse divergence at the time, the minute it starts doing it, I'm going to get out, manage, hit close. Now here, nice trade setup, buy to sell, out of chop, pullback, again, back into the chop zone, but it's okay. It came out. This happens quite often. The retrace, deep retrace, which is nice. Closing here, you can get short anywhere inside here or at the close of the bar. A close above this value area, you're going to be out. And with range bars, you can calculate where that'll be. There's all kinds of indicators that'll box this range bar and do various different sorts of things to let you know when it's going to open and close. And then again, trail out. If you want to do an ad, there is, I don't have it in here, there is a nice left side. And in markets like crude oil, nothing is to the tick when you talk about support and resistance reject, but it comes down to this area, bounces off, you get short, breaks through, hits it, actually a little double top here, doesn't really follow through on the breakthrough, rejects down. No divergence here. Permission to do an ad. Got to watch out for this area right down here, the support down here. When you get to here, in my case, I'm not taking profit here. I'm moving my stop to break even, decides to squirrel around a little bit, and then follow through. Okay, again, sell to buy, pull back, and you're long. So even in tight markets, and if anybody traded oil on Friday and the days before, markets were tight. A lot of times these time frames work well. Let me just see if anybody has any questions, and then I want to just get back to what I was talking about here. Okay, let me go back. Chris, you've been doing this. Thank you very much. Yeah, you've got different types of signals, symbols. You can customize all these. You can control the amount of retrace inside this value area and the type of symbol that you want to plot. Okay. The auto signals, someone's asking me about auto strategy. It is the next step to automation. So I'll just kind of leave that at that for right now. We as partners do have plans to do that. It was something, one of the other reasons I came on board with TFT. Well, somebody's saying they remember a webinar with the system. They offer an auto strategy. I can assure you this system was never programmed and offered as an auto strategy. These auto signals did not used to be part of the system. It is now. Before it was just a visual look at. Now we actually have the signals that can alert. And within Ninja, you can do various different things with alerts. So that we do love NinjaTrader. It's absolutely the best as far as I'm concerned. Intraday trading platform as well as swing trading of futures, stocks, and ETFs. Leading indicators, okay? Price. Anybody that tells you an indicator is leading and gives you an overbought or oversold, you never know what the market's going to do. But this indicator up here is a price cycle indicator. And when it breaks the dots here, the stop dots, this is price cycling. Price is really the only true leading indicator that exists as far as I'm concerned. And it's really not even an indicator. It is a pattern. Price is king. Volume, a lot of times, I used to get involved with a lot of volume trading, following the big footprints of big traders, high-frequency trading volume. But you know what hasn't changed over time? Is price. Price still acts the same way. It reacts the same way to support and resistance. Over time, volume has changed. It used to be that you could follow the footprints of big traders when they would throw in a 100 lot or something like that, and where the big money was going in. Now they spray orders into the market. So the standard volume indicators don't really offer a lot, but price hasn't changed. So, the price patterns, you historically look back with these indicators over years, everything looks very similar. So price is king. We use this to help us and to guide us, to make sure we're on the right side of the market. And we have a price cycle, kind of a deviation type of, I'm not going to call it a channel, but range, where if it hangs in a certain deviation range, you're going to get these value errors. It's very dynamic, so if you can't find left side support and resistance, or if you don't want to look for it, or you don't care to trade for it, you don't have to. A lot of these signals are very successful. Yeah, and again, Chris is saying a lot of the, again, you can put up any price bar up here. It's going to auto-adapt. If they're tight, it'll tighten up. If they're wide, it'll widen out. So I did want to talk about this, and let me see what else we have here. Yeah, I do. I don't have anything up here. I mean, I can pull up a chart. I can just change a symbol here. Let's just change to, pick a chart, any chart. Tell me what you want. You want the 6E? All right, let me pull up let's do this, a 4-wick Renko of oil, and we'll pick up just to show you a different look here, I'm going to do a 5 and a 4. All right, so I'll change this to 6E. I'll change this guy to 6E. And then I want to change this to a 4. Whoop. Don't you love that? It's not giving me data from the server. So I'll just deal with what's on here. Actually, it's okay. The data's here from Friday. And this is a 4-wick. So we'll just go with these two. Okay, here's Friday. Just pop this up, 5-wicked, main time frame, 4-wicked. This is a little on the long side, but you can see a nice drop here. I don't have a value area set here, so I'd pull in a template that has the value area loaded for the 6E. I'm sorry, the chop zone loaded for the 6E. I actually don't have one, right here, right now, but it would just be these dotted lines show up, and then if anything executed inside those lines, it would be yellow. Okay, so right now it's set pretty much right at 0. So we ignore this trade because we have a series of higher lows, higher highs. We get down here, lower lows, lower highs. We get a pullback into the value zone. Bingo, trigger. You can get short anywhere inside here or wait for the signal. You get short. Again, we come to this area. How do you want to manage it? This is 5 wicks, so there was 15 ticks in this trade. Okay. In this case, you can manage to break even. you can manage still, just follow the trails down. If you manage to break even and didn't take any profit, you were knocked out of it. And there is something in here that I call a triple break, something we teach in a trade room, where you have a wedge-looking pattern like this, and you have a secondary entry, high probability that this is going to fail. You get in, anywhere in the values area again, because this is technically a technical double bottom off by a tick or two, and price pulls back in. When it comes to a triple break, divergence, we don't really care about. Standard divergence, you get in, breaks through, boom. You follow out and trail off the stop dot. So nice one trade. Multiple lots. This is a huge trade. You have another opportunity to get in here. Again, goes down. You can put your stop. On trades like this, they generally, when they run like this and just come back in here and take off, your in-trade risk here is 6 ticks. So 12 ticks of target. You can definitely get that. Then we come around, sell to buy, basically shoots up here. No real pullback in here, so we look at a smaller time frame, no real pullback. But what I will tell you is this: most of the euro trading we do we'll look at the 4 Wittrenko and for a main time frame, and then the 3 for. Again, the markets tend to move and swing. You can see here on the 3-wick on the swing up, we have nice alignment between the two areas. Swing up, pulls back. If you really look here on this left side of the chart, there's a reason it pulls back. People take profit. You can see this area here. Okay, kind of stutters up around here. Nice pullback into the area. Signal to go long. Boom, and trail out. Don't take these signals at the top. Use the trailing, the power of trailing, and then you come down at the end of the day. But you get a lot of this chop. You'll see the yellow arrows here. Again, the chop zone is not defined, but this would have been a signal that would have passed. Nice trade here on a smaller time frame. Again, now this is 3-wick, so we put 6 or 7 ticks in, going for 4 bricks, things of that nature. So this is kind of how it works intraday. Personally, inside the room, we're just trading one lot. Outside the room, I trade the method, the system. However, I do have a little different setup. I'm not distracted. I can focus. My wife also trades multi-lots, and so we do things a little differently. Moderating a room is very different than trading completely focused without interruptions. The ATM on the trades, please go to the website, go into the trade room, and you'll see a description of it. Scroll down to the bottom. All right, just a question here. Do we scalp the first and then try to change subsequent lots? No, we go in, at least I do. As a trader, I go in with a certain position. I maintain a certain stop. I maintain a certain target. I look at support and resistance to remove 2/3 of my position at an area that I feel is at least 2 to 1, or if it's a little before that support and resistance, I'll get off. If it's a little after that, I'll increase that 2 to 1, and then trail the third. If the trade set up as a nice ad, then we'll do an ad trade, because these signals will come in the trade. This, to me, run like this up. We're lucky enough to get an entry in here. Nice little near left side support and resistance, reject. Near left side, bing, bang, boom. This is actually a failure once through, second time through. This area of resistance completely failed, and on up. Do talk a lot about that in the trade room too. Yeah, I do trade live money in the trade room. I don't trade in sim. I don't win every day, don't lose every day, and I'm getting better at it. I'm getting used to the distractions, doing it for a couple of months. And, I'm looking forward to the day where I can trade full size. But then, I need to answer people's questions, help you folks out that do pay money and subscribe. Anybody that tells you they do, I shouldn't say this. I hope I don't get in trouble for saying this, but not anybody, but people often say that they do this because they love it. They want a trade room, to do whatever, and they want to teach people, and that may all be true. But realistically, this is a service. It is a business. So, the trade room and it's very inexpensive if you look at what you're getting and compare it to other systems and tools out there. And just please try to keep that in mind. So many times I hear people come up with reasons why they do this and do that, and why they don't just trade if they're so great. It's because it's another business. It's a passive income business. So just keep that in mind. I do use these tools and I do trade with them. I do want to move on though, because I have a lot to go over here. I can't switch monitors here, so I apologize. If anybody else has any questions on intraday trading, I do want to go over some swing trading because there really is some neat stuff I want to show you with these tools that really hasn't been talked about. And I don't know about time here, how we're going. Oh, you're quite welcome, Fred. And again, anybody has any specific questions, please don't hesitate to email us at info@trendfollowingtrades.com, et al. and all that. I'll be more than glad to call you on the phone, talk to you, send you a chart, whatever. It's kind enough for Ninja to be able to give us the opportunity to get in here. I just have to drag these charts because I can't share this monitor in Omnovia. So just give me a second here. I want to drag these guys in. This is for swing trading. I want to show you the power. Everybody thinks they have to day trade. And realistically, you don't, okay? These tools work well. What's nice is you're not buying a set of tools designed for a specific market or two specific markets at a certain price. You're buying a set of tools that self-adapts to all different kinds of markets, all different kinds of time frames, and all different types of trading. So here, everybody can recognize we pull up here Forex, the good old Forex. I don't believe in intraday trading Forex. The execution to me is very poor. The non-centralized way they do it, just horrible. The centralized servers with the futures on the Forex spot market, to me, is the way to go for intraday trading. But swing trading is wonderful. All right side of the chart, all recent data. I'll blow this one up. Look at the most popular one, Euro, US dollar. You can see all the green arrows, 2-to-1 winners. Red hours, 1-to-1 losers. Okay, and this is since February of last year. So this is 1 year. All right, and some of these winners are pretty large. Again, we get in here, signal, same method, same setup. Don't really use a chop zone when using daily. There's a daily time frame, or you can use a 1440 minute, whatever you like to use. You get a signal in here. It's inside the value area, beautiful signal. Take it, calculate your stop, initial, 5 ticks above here. Double that as your first area. Trail close above stop dots, which is right here. Okay, nice trail, you're flat. You get a transition from sell to buy. We make a series, a higher high, a higher low, looking at market structure, get a pullback in the value area. Nice tight trade for risk, calculate our risk. In this particular case, I'm going to go for more than 2-to-1, but I am going to look at this area right here and say when it hits this double top, I'm going to manage. And what does it do? It blows right through it, comes back down, tests its support. I'm well beyond 2-to-1. I'm probably 4-to-1 up here. Take some profit up here, trail out all the way up to here. Essentially you get in here at 1.23 and you exit out here at 1.286. So you're 560 ticks on a trailer. Great for micro lot, great for mini lot trading. If you have the account size, great for full lot trading too. So wanted to show that. Again here, this is another market, the British pound, US dollar, a couple of losers in here. I am showing them, not all winners, but a couple of nice winners also. And you can see here in both the euro and the pound, we are in a swing and down. Unfortunately, I'm not trading Forex at the moment. I was one of those guys who got burned with a pretty big account in PFG. And tell you what, if I can survive that, I think I can survive anything. It's just a Canadian US dollar. I do like the US dollar pair crosses. Do I trade this in the room? No, but it's something we're going to be talking about more and more. I'm going to spend time posting a lot of this. This is an end-of-day decision as far as I'm concerned. Again, anybody, info@trendfollowingtrades.com, please shoot us an email. And I do want to talk just real quick about this option strategy that I promised. I'm going to drag these 3 charts in here. Guys, this has nothing to do with TFT. It's something I do This will take me 5 minutes, Ray. Do you mind if I just spend a few minutes talking about this? It's something I really promised I'd show, and essentially the trendfollowingtrades.com is the webpage. But anyway, here, what this is an Apple, Bed Bath & Beyond, and Google chart. This is something I do in my retirement account. It is a simple play called a straddle, okay? Straddle, the deviation of it's a strangle, simple level 1 options play. What you do is a day or two before earnings come out, it's an earnings release. It's a really cool thing. You buy a put, you buy a call, earnings come out, the market jumps 5 to 10%, you've doubled your money or more. In this case, it was like a quadruple. The call becomes worthless, the put pays for the whole position and then some many times over. This is an earnings release on Bed Bath & Beyond, the last one. Again, here. Guys, please look at this. I trade it. A couple days before earnings, you have a choice. Buy at the money put, at the money call. If you can't afford an at the money put and at the money call, it becomes a strangle. You buy a call, buy a call out of the money, a put out of the money, and then the market just has to, the cheap options are cheaper, the market just has to move further to get the profits. But to me, the straddles are worth it. The downside, you're in a hedge position. If the market goes nowhere but sideways in a couple of days, close out the position. Basically what you lose is a little bid-ask spread and time decay. So very low risk. Again here, an earnings release, that yellow dot. And just want to show you this. Really great play. It has taken my retirement account, and instead of having to wonder about being in, I make these plays every quarter of certain stocks that have known gaps after earnings announcements. A lot of times they don't, and then you just close it out. Very little risk, very little loss for me. So just wanted to share that with everybody. It really has nothing to do with the tools. I do notice, though, that the market does tend to gap in the direction of this Momo indicator. You can see that here. Pretty much with all three of these. I just threw these three up because these are three that I do play. So outside of that, I believe I want to thank everybody for being here. And again, you have any questions, you can opt in. Let me get the web page up here. Again, that special, you get a free month of Trade Room if you get in before midnight on Sunday, Eastern Time. And you can opt in here. Got to change some of this verbiage, get your name, email. We don't shoot a lot of email blasts. This is to let you know of upcoming changes, little webinars we do ourselves, things like that, maybe some training events. The Trade Room tab is the first place you can go to find out what the latest thing is. Don't be afraid to scroll down, to the bottom and, look at some of these videos. You'll see the honesty. I'm a very transparent, straightforward trader, and, do have a lot of experience with a lot of different systems, and this is, the direction that I've decided to take moving forward, and, I'm sure it'll be a great thing for myself and many other people that come on board. So having said that, thank you, Raymond, very much. I know, you like to keep this down to an hour, and I'll let this go. Again, if anybody has any questions, do appreciate it. Let me just see here. What's the special? Special is a free month of the Trade Room. Essentially, join up with us. You get a free month of the Trade Room. The Trade Rooms, you're quite welcome, guys. The Trade Room's a separate part of the subscription. Subscribe to the tools, the Ninjacator tools without Trade Room, and there's a separate link. There's not a button, but it's a hyperlink. It'll get you a separate subscription to the Trade Room that's managed separately. We do that because if we take weeks off, everybody takes vacation, 2, 3, 4 weeks, whatever, we go traveling and go away, we will credit people time so that it's not a recurring subscription, where you pay for a month and you only get a week type of thing. And by the way, you must be a subscriber to the tools in order to be a Trade Room member. We will not accept any subscriptions to the Trade Room without being told. You can't just come in the Trade Room and watch. There's too many people, I do put stop limits in and all that. There's too many people that want to view it as a signal service, and that is not what it is. So it's an educational, real money mix. Talk about your questions, your trading plans. Again, trade with a plan, always with a plan, and things of that nature. So guys, I hope you enjoyed that. Again, if you have any questions, call me Trader John, TFT John, or just John. Please don't hesitate to email. And if you want me to talk on the phone, include your number. I'll call you back. I don't care where you're at in the world. I'll give you a jingle. We can get on Skype. We can do whatever. So, no, indicators are leased. And again, it's once you get set up, essentially it's $100 a month. And, that's something that we're discussing internally about selling them. But me personally, I don't want to obligate anybody to purchase indicators until they've been working with them for at least a few months. And then we can talk about, hey, I like it. This is the way I'm going to do. I'm profitable. This is where I want to go. Then let's talk about getting a lifetime license. But right now, it's leased month to month. So that's something we'll address on a case-by-case basis. All right, thank you, folks. Again, thank you, Raymond and Ninja Trader. And having said that, I'm going to sign out. Have a great weekend, everybody. And again, if you have any questions, please don't hesitate to send us an email. Thank you, Chris, also, and Sylvia. Edel, just shoot me an email. I'm going to get booted out of here, so I'm not going to be able to, or give me your number, I'll call you. I can go over the highest probability entries and all that stuff. This really, Ninja Trader is kind enough to let us be in here, and don't want to abuse their hospitality. So, folks, I got to get out of here. Thank you very much, and hope to talk to you soon.